Imagine this. You wake up, grab your coffee, and check your trading app. In just a few hours, you make a couple of high-stakes trades, cash in some quick profits, and call it a day. Sounds like a dream, right? Now, picture this. Instead, you invest in a few solid stocks, forget about them for years, and then, one day, you check your portfolio to find out you're sitting on a small fortune. Two different approaches, two different mindsets. But in the end, which one really wins? That's exactly what we're breaking down today. And stick around because toward the end, I'm going to reveal an eye-opening truth that might just change the way you invest forever. Understanding day trading. Day trading is all about making fast moves, buying and selling stocks, options, or crypto within the same day to capitalize on short-term price movements. Some traders buy in the morning and sell by the afternoon, while others hold for just a few minutes, try and profit from small price changes. It's exciting, fast-paced, and can be incredibly rewarding if you know what you're doing. There are some big pros to day trading. First, you can make quick profits without having to wait for years. Second, it's an exciting and dynamic process that keeps you constantly engaged. And third, you avoid the risks of holding stocks overnight, meaning you don't wake up to unexpected losses due to bad news. But with high rewards come high risks. The downside? One bad trade can wipe out weeks or even months of profits. It's also mentally exhausting, requiring constant attention and quick decision-making. Plus, trading fees, commissions, and taxes can eat into your profits if you're not careful. Here's a hard truth. About 80% of day traders lose money over time. While there are people who succeed, it takes extreme discipline, deep knowledge, and an ability to control emotions under pressure. But what about the alternative? Understanding long-term investing. Long-term investing is the complete opposite of day trading. Instead of chasing daily price swings, long-term investors pick solid companies, ETFs, or assets and let time do the work. It's the classic buy and hold strategy where patience is the secret weapon. The benefits are clear. First, less stress. You don't need to check the market every hour. Second, compounding growth. The longer you hold, the more your money can grow. And third, historical success. The stock market has gone up an average of 8 to 10% per year over the last century, meaning patient investors typically win over time. But there are challenges too. The biggest one, patience. Gains take time, and it can be frustrating to see slow progress. Market crashes happen, and it takes discipline to stay invested when prices drop. Plus, your money is locked up for years, meaning you miss out on other opportunities. Here's a real-world example. If you invested $1,000 in Amazon stock in 1997, it would be worth over $2 million today. But that only worked for those who held on through all the market crashes and volatility. The real question is, which strategy actually makes you more money? Which strategy wins? Let's look at the numbers. A study by Charles Schwab compared active traders to long-term investors. The results? Long-term investors consistently outperform most traders over time. Even Warren Buffett, one of the world's richest investors, says the stock market is a device for transferring money from the impatient to the patient. But that doesn't mean day trading is all bad. Some traders do make serious money. But here's the catch. They treat it like a full-time business, not a quick side hustle. So here's the truth bomb. If you love fast-paced action, have time to learn, and can handle risk, day trading could work for you. But if you prefer steady growth and minimal stress, long-term investing is the better bet. However, what if you could get the best of both worlds? What if you didn't have to choose just one strategy? What if you could enjoy the long-term benefits of investing while still taking advantage of short-term trading opportunities? The good news is some investors do exactly that. Instead of committing solely to day trading or long-term investing, they use a hybrid approach that offers the best of both worlds, striking a balance between risk and reward. One popular strategy follows an 80-20 split, where 80% of your portfolio is dedicated to long-term investments like index funds, blue chip stocks, or ETFs, while the remaining 20% is set aside for short-term trades. This way you have the stability and growth potential of a long-term investment plan, while also leveraging short-term market movements to boost your overall returns. For example, your long-term holdings might include stocks in strong companies like Apple, Microsoft, or Tesla, stocks that have a history of steady growth. Meanwhile, your short-term trading portion allows you to capitalize on short-lived trends, earnings reports, or market volatility. If done strategically, this approach reduces overall risk while still giving you the excitement and profit potential of active trading. This strategy only works if you have discipline and a clear plan. Treating short-term trading like a casino can lead to major losses. Risk management, knowledge, and emotional control are crucial to balancing both methods successfully. And here's the real key to wealth building, something most people overlook but can completely change how you invest. The shocking truth: at the end of the day, no matter which strategy you choose, day trading or long-term investing, the real key to winning isn't just about picking the right approach. It's about something far more important: discipline, patience, and mindset. The truth is, a bad trader loses money not because trading is bad, but because they chase hype, take impulsive risks, and let emotions control their decisions. They panic when the market drops, jump into trades without a plan, and often end up burning their capital. On the other hand, a bad investor loses money because they lack conviction in their choices. They buy stocks at their peak when the market is euphoric, but when things get tough and prices dip, they panic, sell a loss, and miss out on long-term gains. But the best traders and investors, they understand that success in the market isn't about luck. It's about sticking to strategy, managing risk wisely, and staying in the game long enough to win. They don't let emotions dictate their moves. Instead, they follow a plan, learn from their mistakes, and stay committed to their financial goals. So, here's the big question for you. Which path will you take? Are you more drawn to the fast-paced, high-risk world of day trading? Or do you prefer the slow, steady growth of long-term investing? Maybe you're someone who balances both. I'd love to hear your thoughts. Drop a comment below and let's start a conversation. Your insights might just help someone else on their financial journey. If you found this video helpful, don't forget to smash that like button. It really helps support the channel and lets us know you want more content like this. Subscribe and turn on notifications so you never miss out on our latest videos about investing, trading, and building wealth the smart way. We break down complex financial strategies into simple, actionable insights that can help you make better money moves. Now, I want to hear from you. Are you team day trader or team long-term investor? Which strategy do you think is the better path to wealth, or do you use a mix of both? Drop your thoughts in the comments below. I'll be reading and replying to as many as I can. Until next time, invest smart, trade wisely, and keep growing.